The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good morning, TFNN. Welcome to the March 26th terrific Thursday edition of today's opening bell on the Trader's Edge. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there had a wonderful Wednesday. Let's make sure that you and I, we do everything to make this not just a terrific Thursday, but an extraordinarily terrific Thursday. Of course, the easiest way for each of us to do that is to always remember that life happens for us, not to us. You see, when you and I, when we can make that little 2x4 shift out there, it means that we can find the gift in every set of circumstance that life is going to throw at us. That's really the role of life. And when we trade these markets, it's the role of these markets. It's the role of buyers and sellers out there. So today we're going to go ahead and take a look at what the buyers and sellers are doing. Of course, the most important thing for you to understand is that I am absolutely grateful for your presence here. Now, I'm here to serve you. That means all you need to do is pick up that phone, dial on in at 877-927-6648, or internationally you can call in at 727-445-1044. That way you and I, we can go take a look at a market, like Tom likes to say, bisect and dissect the market. We'll look at both sides of the trade. This is, of course, Terrific Thursday, none other than Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now we got the Dow futures off about 85 points, trade out at 17,563. S&P futures off 8.5, trade at 2,045. NASDAQ down 30 points right now, trade out at 42.93. King dollar back 3,300 ticks, down 30 cents, trading out at about 96.88 or so. Goldilocks up $6 at 12.03. Silver up 3 pennies at 17.03. Light sweet crude up 97 cents as we speak, trading out at $50.17. Let's take a quick peek across the globe out here. Of course, in the relay race of life, we didn't do a very good job. The U.S. markets and handing off to Asia. You had the Nikkei finishing off about 275 points, 1 3/10%. Hang Seng basically unchanged, down 31 points. That's less, just over 0.1% out there, just a smidgen. And then you had the Shanghai, that was up 22 points last night, up 0.6%. Right now, over in Germany, the DAX is off 157 points, 1 3/10%. Let's go take a look at the DAX. So the DAX here gapping down a bit off of its session lows out here. The DAX still strong like bull. Now, what we know about the DAX is it made the 1 to 1.618 A to B equals CD to the upside. So it's really just working off an overbought condition, just traveling sideways out there. So I don't see any real significant damage here inside of the DAX. If we take a look at the FTSE, which is even more important for us to be paying attention to, I think it's on this chart here. Let me come over and take a look at the FTSE on this page here. Now, what is important for us to look at inside the FTSE, let me turn a couple of things off here. Makes it a little bit easier for us to just, got so many different lines. Let's turn that off. There we go. And this is really what's important. In fact, let's just turn this off. Let's turn that off and turn off that. There we go. Now, when we take a look at the FTSE, I'm going to put this on the weekly chart. And we'll start off, we began the week on Monday. We began actually taking a look at weekly charts with regard to the Dow, the S&P, Russell, and so forth. Now, on this weekly chart here for the FTSE, price has now made its way back below key level, 6950.60. Now, the week is not over. It's only Terrific Thursday. It's only the beginning of Terrific Thursday. But the key number here to be watching, there's really two levels to be watching inside of the FTSE. 69.50.60. Now, it's really important, in my opinion, as the FTSE comes to a close tomorrow, because what the FTSE did last week with a nice wide-ranging bar is it broke above the consolidation high from December of 1999. So for the first time, the FTSE is above that 1999 level. Now, it's a huge consolidation because you're talking about from 6950 down to about 10,000, I'm sorry, down to the 3,500 level. So you're looking at a 3,500 point consolidation. That gives you a price projection of 10,400 if, in fact, the FTSE can stay above 6950. Now, there's a secondary consolidation level for us to watch, and that's the 2007 area. So we've seen the FTSE kind of tracking in between these two levels. Now, again, I'm going to pull this in. I'm going to go ahead and expand it out. That way, it'll be a little bit easier for you watching here on Tiger TV. 6950.60. It's trading at 6903 as we speak right now. When you break through any type of resistance in this case, what you really like to see, you may not like to see it because you just simply want things to just take off, but what you really do want to see if you are long is you want to see price come back and test a level of old resistance, which should become new support, and you want to see that actually hold. And if that does, that gives you a higher probability that you are on the right side of the trade here. At this stage of the game, we don't have enough information other than to know that that level is now being tested in week one. Now, nice wide-ranging bar last week, so you cannot ignore that. Do we have a bearish reversal signal even as we speak right now inside the FTSE? The answer is absolutely, positively no. We do not. All we know right now is that the FTSE has gotten back just slightly below that breakout area, and that's what's going on inside the FTSE. We want to pay attention to these markets. We want to pay attention to these markets because of the correlation. Where's that chart? Should have just had it ready to go on my screen out here. Let me see if I can find it real quickly. And that's just simply by taking a look at our markets and how they move together. Gosh darn it. It should be, I really need to clean this page up. I mean, if it's confusing me, just good Lord, it's got to be confusing the heck out of you as well. Oh, here it is, right in front of us. Couldn't get any larger as far as the window. So here's the markets. If we take a look at the DAX on top, the FTSE on the bottom, and I just simply have the S&P, I'm sorry, the FTSE in the middle and the S&P on the bottom. And the reason why we take a look at these markets and take a look at these correlations is because of the symmetry that you have in essence, the directional symmetry that we have with inside of each of them. What we can see here, and at least what I notice, if I take a look at the bottom portion of my screen, which is the S&P 500, versus the FTSE and the DAX, which one looks like it has the most damage? Yeah, our markets here. So worldwide markets are kind of saying, I don't think so. Yesterday's action is probably overdone. Maybe today's action here is a little bit overdone as well. But if I look at this chart, it's saying like, I don't know about you, in Florida, great time of the year, by the way, to be eating pompano. Not the city pompano, but the fish pompano. Beautiful fish. If you've never had it, you really need to have it. Easy to grill out there. Leave the skin on, obviously, on one side. Nice fillet. Go ahead and put a little garlic, a little olive oil, whatever other spice you want. Stick it on the grill for about 5 minutes. Now, here's the key in cooking that pompano. If you leave it on the grill for more than 5 minutes, like 5 minutes, 10 seconds, no, I'm just kidding. But if you leave it on there for maybe about 7 minutes, instead of being a nice moist fish, it's going to get overdone. And that is exactly what is going on inside our markets out here right now. Yesterday's action, a bit overdone. At least when I take a look at worldwide markets and other things that are going on out there. Does that mean that the bottom is in? No. Right now? No, it doesn't necessarily mean that. But shoot, at the beginning of the week, what I said was we're going to be looking for what? A choppy market out here. Hey, yesterday was a little bit more than a chop in the market, but it was a pork chop is basically what it was out there. I don't even know what that means, but what it does mean is that, look, the reality is if you leave a piece of fish on the grill or even a piece of chicken or a piece of steak, I don't care what it is, if you leave it on just a bit too long, it gets overdone. And that, in essence, is what's really going on inside our markets out here. I said you should be looking for the next major bottom to take us on in through the April timeframe, and nothing has changed with regard to that. It's just simply that the markets have gotten a little bit toasty, a little bit toasted out here, a little bit overdone, in my opinion, in my humble opinion out there. Nothing has changed with regard to that view. So that's now just taking a look at the correlation between those charts. Now, let's go take a look at, let's go back to the weekly charts out here just to kind of keep things in perspective out here. So here, when we began the week on Monday, what we identified for you, what took place over the course of the last couple of weeks inside the S&P 500 are these beautiful horizontal trading ranges. Now, it's horizontal trading ranges. The beauty of this, if we take a look at it, And I had a great question from someone in the den. Might have been Z. I don't recall who it was now off the top of my head. The question was, the lines that are going across my screen, are they static? And the answer is yes. The data that we're looking at, by the way, goes back to 1996. So I'm using, this is a weekly chart that we're taking a look at. On a weekly basis, I am using the body of the candle is the essence of price. The wicks are nothing more than the extreme emotion. They're the temper tantrums out there. What you really want to be focused on is the actual body of the candle. That's really where you get, the information. Tom talks about swing points and being able to use swing points as a release of information. When you take a look at a candle, it's really the body of the candle that is the essence of what's going on inside the marketplace. And therefore, utilizing these horizontal trading ranges really helps us to identify natural levels of horizontal support or resistance. Now, because I'm using data that goes back to 1996, how many years is that? 2006, to almost 20 years worth of data, right? So you got 19 years worth of data out here. That's plenty of data to be using. And the solid dash line that you see down around the 1265 level, that's where we've got the largest number of co-located opens or closes. Doesn't matter whether it's an open or a close. 23 to be exact, within a fairly small range out there. In fact, the next level down with regard to co-located opens and closes, that's the next dash line, 29. So, and that's at 1110. So the difference between 1110 and 1265 on a weekly basis, you take that difference. I'm not going to do the math. You do the math out there. All right, you want me to do the math? It's about 154 points or so. 155 points is what we'll use it. All you need is to understand where the largest congestion areas have, and you can just continue to add those 150 points. In fact, if I go ahead and I take this chart, let me just do this here. Let me get that tool on my screen. I'm going to go ahead and get rid of the midpoints out here. And now what you're going to see is just these solid lines out here. Those are the real solid lines of conviction, the area of support and resistance. Now, when you take a look at just the solid lines, this is what I want you to focus on. You can see that all throughout time, when we take a look at the S&P 500 on a weekly basis, once you get above a level, price is likely to rise to that next level. It's like getting on an elevator, for goodness sakes, out there. You thought I was going to say something else. I was not. I was going to say for goodness sakes out there. Now, likewise, when I talked about the FTSE coming back and testing the level of support, take a look at back here in 2013. Price gets above the level, forget about the midpoints, comes back, tests it, rejects it, level of what was old resistance, then becomes new support. Price does what? Moves right up to the next level. Moves up to the next level, breaks above it, comes back, tests it back in February 2014, gets back up to the next level. Tries to break through, finally breaks through. What does it do? Comes back here in October 2014. The body of the candle, the essence of price, tests it, rejects it, gets back up there. Where we're at right now, look, unless the S&P 500 breaks below, with significance, breaks below 2042, all that's going on here is nothing more than a testing basis of an old level of resistance. It is now your new level of support. The S&P 500, folks, it wants to get on that wall. And that next level of that wall is 2198. Has not broken any kind of level of support as we speak right now. Hey, the week's not over. Anything can happen by Freaky Friday out there. But we'll see. This is Steve Rhodes. This is TFNN. We'll be right back, folks.
As this one-of-a-kind winter comes to a close and spring approaches, it only seems fitting that now is the perfect time for a spring Tiger Dollar sale. For this week only, we're doubling the bonus that we give when you purchase any amount of Tiger Dollars. Normally, we offer a 10, 15, or 20% bonus when you purchase Tiger Dollars, but for this week only, we're doubling our special offers, and you can now get up to a 20, 30, or even up to a 40% bonus on your Tiger Dollar purchase. This is one of our best Tiger Dollar sales of the year and won't be around for long. Tiger Dollars can be used for any TFNN product or service and provide a great way to lock in added value on your subscriptions. Tiger Dollars never expire, so whether you're a current subscriber or plan on subscribing at one point in the future, take advantage of this spring Tiger Dollar sale this week only and get up to a 40% bonus on your Tiger Dollar purchase. This sale ends Sunday night, so don't miss out. All the details are on the front page of TFNN.com. Get your Tiger Dollars today and lock in your bonus before this sale passes you by.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Chef Stevie with you here right now. We got the Dow futures off 94, S&P off 9.5. So, okay, we took a look at the longer-term chart out there, the intermediate-term chart, the weekly chart here for the S&P 500, just to keep things in perspective out there. Now, I just caught the end of John Logan's show out there, and I know he was looking at the 240-minute charts out there. And we use different time frame charts. Now, I'm going to go ahead and put the 30-minute chart out here because he was looking for some new market profiles to arrive. And on that 240-minute chart. But let's look at the 30-minute chart and see what it is that we know out here. And what we know inside the 30-minute chart is that it has made that famous seventh inning stretch. If you like baseball games out there, you know there's nothing like the seventh inning, right? You get to sing that great song out there, and I'm going to spare you my singing of that song. I'd rather cook for you than I would sing to you. But we have that seventh inning stretch to the downside and a potential, well, not even a potential. We absolutely made it. And that took place early this morning. What was it, like around 6 o'clock or so? It actually confirmed at 6 a.m. This morning. Now, we do have a market profile that existed that formed at the same time that was happening, which is a beautiful thing out there. And really, it's kind of, this is pretty much, this market profile doesn't tell us whether it's the bulls or the bears that are really in control right here. It's just kind of equally spread. What it does tell us is that about the 2046 level is what we'll call it. Looks like 2045 25.75. So right around that level is an area of resistance. Now, that is an area of resistance. We have not seen the ES mini on a 30-minute chart break above a level of resistance here since when? Let's come take a look at it. When was the last time we saw resistance broken above? How about this? We have not seen it. We've not seen the ES mini break above resistance since this is back at about 11:30 and 11 o'clock in the morning on March the 20th. So that was on Friday, was it not? So as the markets were making their high. So I think it's pretty important for us to go take a look at that 30-minute chart out here. In fact, let me do this. So I'm going to go switch over to the E-signal chart. We'll just clean it up just a tad. Hopefully it's got the same profiles on there. Sometimes there's a little difference between the systems, but let's go do this. Here we go. And let me turn off a couple of things. So this will be a little bit easier for you to take a look at it, and it'll be visual. And this way, whether you're long or short, that doesn't really matter. You're always looking for information, right, to be able to help you understand what the markets are doing. And that's really what we're doing. So I'm going to turn off some of these tools out here just so we can just look at that. So here we go. Okay. So if we take a look at market profiles on the 30-minute chart, just to get a clue as to what's going on, we can see that as the markets were making highs, those levels of resistance were being taken out. And back as the market was making its high back here last Friday, on the 20th, we saw we all of a sudden started to see that level hold as resistance out here. And in fact, well, with the exception, I should say, with the exception of what looks like on March 24th here, we saw some slight breaks of that level that held for about a time period of, let's see, 6 a.m. till about 8 a.m., 2 hours, 2 to 3, we'll call 2 to 3 hours out there in the market. And ever since then, we have seen these levels hold as resistance. So this level of 2,045.75, it says 0.68, but the ESP doesn't trade. It trades in quarters, right? So as we take a look at that, if we're to see a close above that on a 30-minute basis, only about 2.5 minutes left in this trading session, so likely not to occur. So we'll be looking for that 9:30 to 10 o'clock session. If, in fact, we see that, we know that that seventh-inning stretch candle that we took a look at is truly taking effect. And it'll tell us at least that we've got some type of short-term change in trend that is taking place inside the ES mini. Maybe it's more than a short-term change in trend. I don't know. If you just were to take a look at now, the question becomes, hey, where does the bounce come to? You know, I think you just got to go back to the highs down to the lows out here. I think you just really keep it simple. It's like there's nothing wrong with that KISS method in life. And the keep it simple says 2061.42 would be the level to focus on and to pay attention to. Look, even inside the week link out here, even inside the Dow, it also made that seventh inning stretch candle. And its market profile, by the way, is set up for a bullish move. You see, it's set up for a bullish move. If we go ahead and we pull this open here, you'll see that point of control very close to the level of support. That's a beautiful signal because it tells us that it's actually buyers, believe it or not. As the markets were making lows here on a 30-minute chart, it truly was the buyers that were communicating to you and I that they're the ones in control. So the key level here inside the Dow futures, 17,580. You see it close above that along with the ES mini, and there will be signals. It'll be saying, hey, if you're short, okay, but make sure that you've got your stops. Make them nice and tight out there. No reason to give away anything. In fact, as I say, to switch to the long side of the market, could be. Maybe something to think about. Hey, during this break, let's come up with some of our favorite recipes. Of course, I gave one of my favorite recipes for cooking eggplant. Eggplant on the grill. Of course, eggplant, zucchini, onions, you name it. I'm not much of a pepper guy. They don't really work really well. Habanero peppers, that's one thing. But green peppers, not so good. This is Steve Rhodes with TFNN. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
We're off to the races. We got the Dow up 107, trading out at 17,611. S&P down 10 points at 2,050. Composite off 47. She's traded at 48.29. Russell down 6 points at 12.27. DAX off 168. FTSE down 84 points. Goldilocks up $8. Silver up 9 cents. Lightspeed crude up $1.52. Let's go check in on the commodities out here. We're going to go take a look at gold. Of course, the looks like the front contract now really with the trading volume being the June contract for Goldilocks. As we take a look at gold, that's the weekly chart. Of course, the weekly chart, that's a beautiful thing because you get a little key reversal session inside of Goldilocks here. last week. So that's a beautiful thing. We know that we saw the large commercial traders really moving off their net short positions in a big way over the last 2 weeks out here. Let's go back and take a look at the daily chart. What do we know about gold as we speak right now? Again, this is the daily chart. If we go from low, or if we go to high, if we go from the high to low, the high of January 22nd down to the low out here on March the 17th, we can see that that 0.382 retracement is right where gold is trading right now. 1206 is that number. We're trading at 1205.90 out there. What this tells me at this stage of the game is gold's likely to head to 1245 next. Now, if we drill down into the intraday charts out here, let's go take a look at what's going on a 30-minute time frame. And as we do that, let's go add our market profiles out here. Let's go add those back into the mix. And what we're going to find out is that, well, what I think we're going to find out is that price just simply inside of a goal. So what's nice on that 30-minute chart is between 4 a.m. and 4:30, we saw a nice spike higher with volume. That high has not been tested. That high is 1220.40. Pretty good chance that level is going to be tested again. Now, price just simply has been pulling back into its market profile, kind of somewhat an equal distribution here. Maybe the sellers inside gold having just a little slight advantage out there, but as long as 1201.20 holds, in fact, 1201.20 may be the next spot where somebody would want to go ahead and take a look at a long position out here. Let me put a 10-minute chart out here. Let's go see where that volume bar, that spike was. That spike, yeah, was probably a spike on a 10-minute chart. We've got price pulling right back into that support-ish area. If you will, but a big spike up with 2,200 contracts, and that was between 4 a.m. and 4:10 out there. Could potentially also have an A to B equals CD to the downside on that 10-minute chart. Now, that would be a beautiful setup for you. That would be a nice little Gartley buy pattern. We probably haven't had too many of those since gold has made that made the bottom and then on its move up. But your A to B equals CD on the 10-minute chart, it's probably there in the 30-minute as well, would say 1199.20. 1199.20 would be your 1-to-1 A to B equals CD to the downside. So 1199 versus what on 30-minute chart? I think we're at about 1200 for the level of support out there. On this market profile, yeah, 1,200. Boy, that would be a nice setup. Don't know that that's going to happen, but that would be the setup that you would want to focus on and pay attention to. Of course, you'd like to go ahead and see if that were to occur. You'd like to see it be in a small ranging bar and light volume as that level were to get hit. That's what's going on inside of Goldilocks. We'll put this back to the daily chart. If we go take a look at silver, see what silver is doing out here. Hi-ho silver up 6 pennies as we speak right now. What did I do? I deleted that chart? Good Lord. Man, oh man, sometimes I just hit the wrong button out there. So those old fat fingers. That's okay. We can get back to it. Give me a moment here. Edit this. No, I don't want to edit. I want to just put a different style template up here. So let's do that. Let's put up with one I call Radio 1. So if you take a look at Radio, what's that mean? That's just a bunch of other tools that are set up out there on that template. So it makes it pretty easy. All right, so now we're going to go take a look at this silver. You guys didn't really need that entire introduction. So if we take a look at silver, what the heck is that? That's the U.S. dollar index. That's not what I wanted to look at. You might have wanted me to take a look at it, but we wanted to look at was silver out here. So as we take a look at silver, now we'll get that chart back up on our screen. What do we know about silver? Number one, if we take a look at retracements from high to low, so it looks like we'll use the January 21st candle session down to March 31st, and the 0.618 retracement level was hit this morning, and that is at $17.28. Of course, we knew by having that nice wide-ranging bar as price just sliced through the 0.382 retracement level, just like some nice carry gold butter out there, sliced right through it. Wide-ranging bar was signaling to you, was signaling to me, was signaling to the world that that level of $17.28 was going to go ahead and get hit out there. Okay, so that's done. Makes sense that you'd start to see, so you got the 0.382 retracement inside of gold, 0.618 retracement inside of silver. Says we got to keep an eye on these things out here. If we look at the intraday time period here, let's go down to the 10-minute chart for silver, see if there's any pattern. I don't know, I haven't looked at the chart myself. Yeah, so we do have, looks like the A to B equals CD pattern. I don't know that it's completed, but let's go take a look at it. This also had that nice spike up here at about 4. Yeah, maybe that was because, but I think they were announced that, was it Jordan? Who was it? The Saudis. Somebody was attacking somebody. Of course, they're always attacking over in that Middle East out there, over in that desert. They're always attacking. You know, they've been fighting for eons and eons out there. In any event, with regard to the eons, the A to B equals CD to the downside in silver wouldn't complete till about the $16.89 level out here. I don't know that price will hit that level, but it is something to focus on and pay attention to. Now, I've got one eye on these charts, the other eye on my other screen here, just paying attention to that 30-minute chart that we focused on during the second segment. I'll switch over here just to this chart so you can take a look at it. We still don't have the ES closing above that resistance level of 2045.75, but price did come back at the open, came right down into that point of control. I mean, when I say right down into it, I mean right down into it, but let me go ahead and put the data window so I can actually see what it did. The low of that, the center of the box, 2040 and a quarter, we actually saw price get down to 2040 and a quarter. You got to like that. So right now it's trying to break above this level. So as I say, if you're short, okay, you got a huge gift yesterday. You know, you got somebody who cooked the market, you know, and got into overdone status out there. Just left the S&P on the grill for a bit too long. So again, the 30-minute chart, this time frame doesn't, and for another, looks like 18 and a half minutes or so out there. But we are seeing a change-ish in trend out there. Hey, here's your expectation. We see it close above 2045.75. You should be expecting 2061. So you've got to determine whether that you want to go ahead and take the heat for that number of ES mini points out there. If we go take a look at volume, well, that's a 30-minute chart. Let's just go take a look at volume out here on the 10-minute time frame. Where the heck is it? Here we go. Let's go take a look at it. Here's the 10-minute time frame out here. Let's see what do we got. So, you know, did we spike lower, in essence, at that open on that first 10 minutes? I'd say no, not really, because the spike would have been down here at 520 this morning. I would say more likely what it was doing, it was pushing into the high, its most recent high, that little swing point at 910 with volume out there. So that really bodes well for the market going ahead. And if you take a look at the 10-minute chart, you know, we talked about those, or I spoke to you, or we took a look at on the S&P 500, those horizontal trading range boundary lines. Hey, I've got them on the 10-minute chart out here as well. And the 10-minute chart says that the next real level of significant resistance is at the 2066 level out here. 42 occurrences have taken place. Now, when I say 42 occurrences, I'm cutting out. I'm shutting my counting down at about 5:15. When the futures market closes out here. So I'm not looking at that. And I think I pick it back up at about 6 o'clock in the morning just to pick up, you know, because otherwise you get a lot of counts here with just nothing more than sideways action. And that doesn't make a lot of sense. So you got 2066 there. What do we have over here? You had 2062. So you break above this 2045-ish type level, 2046. That is likely where the ES mini will then run into resistance. Doesn't mean it stops there, but it'll likely go ahead and pull itself up kind of like a magnet formation out there. So hopefully that gives you a pretty decent feel as to what's going on. And you know, I hope hopefully one of the reasons that you tune in the morning out here, especially when you see, you know, Dow futures are down 150 points out there. And, you know, if you woke up at, I don't know, 4 or 5 in the morning and you saw that, you might be licking your chops saying, this is great. What you got to do is you really got to put these patterns and everything else into perspective out here and just kind of, you know, always step back, take a look at the charts and see what it is that really is the current message. Now, let's go take a look at some current messages out here, some things that are working well and things that are just simply falling apart. And on the falling apart side, it looks like we've got SanDisk out here, SNDK. Now, this thing is down to 17% this morning. Let me go ahead and let's take a look at the daily chart on this. Now, SanDisk, they cut their revenue outlook to $1.3 billion versus $1.4 billion out there. You know, who else knows what they've done? I'm just looking at the headline. But if we do take a look at SanDisk, it's struggled out here as of late. This thing had this is the third gap to the downside. I don't know if this is a three-gap play just yet. Somebody would have to do the math. You'd look at the first gap between July 17th and July 16th. There's your first gap. You have your second gap out here. Now, that gap's relatively small. The question is the third gap larger? And it looks pretty close. I'll give you the numbers. You do the math on it. What you'd be doing is you'd be subtracting, maybe somebody in the den will do this for me. You'd be subtracting 95.47 95.47 from 86.95. So 95.47 versus 86.95. We'll see if I've got any wingmen out here. So that would be the price level. And now this gap here that's taken place thus far this morning needs to be larger. That amount that you would be taking a look at is you look at the low, you'd look at 81.08, and from that you would subtract 69.50. So if that level there, that what I just gave you, again, that was 81.08 minus 69.50, and, drum roll, Johnny, maybe somebody's got that number for me. If that is larger, then in the case of SanDisk, it could potentially be a three-gap play to the downside. Now, let's take a look at a little bit longer-term chart as well. Let's go, I'm sorry, we don't even have to do that. What SanDisk is doing, it's trading back into a swing point from back in February 2014, when our markets made a fairly significant low. That low out there was 67.50. Now, the volume there was 4.7 million shares. You've already done 7.6. You haven't tested the low, which is 67.50. You've only been down to about a level of 60, what is it here? 60, come on, work with me. 66.11 is the low. Let me put this on a weekly chart. So let's see as it goes after that swing point. Is it doing it with, well, that's a nasty looking candle session, that's for sure. But as you come back to this level, it's not so much a swing point on the weekly chart in that February. But if we go back to that February time period, just look at volume, that's 22 million shares. You've already done 18 million shares. So you're really coming into that general area on a weekly basis with a bit too much of volume out here. A to B equals CD down patterns. Let's go take a look at those just to identify some price projections here for SanDisk. This is really the one that we want for A to B equals CD to the downside. And that says that SanDisk easily could make its way down to 55.09. So if it's really not a three-gap play, that's likely where price will move to. I'd say 55.09, maybe even 46.29 out here in the case of SanDisk, SNDK, just getting truly hammered here this morning. Also moving to the downside, Biogen for another day. Now, Biogen absolutely did fall apart here yesterday. Let's go take a look at it. However, on the weekly basis, it's really just an inside session out here. How about that? On a weekly chart, you had volume last week up with 18, almost 19 million shares. So far this week, only 10 million shares. Now, on a daily basis, what's the normal volume out here? So we've got 2 more days left. What's the normal volume inside of Biogen is about 2.5 million shares. So on a weekly basis, I'll put that back up on my screen just to kind of keep this in perspective. I always like perspective out here. You got to be nice and calm. On a weekly basis, this is actually pulling back with light volume, Biogen. Because, again, you were up with 18 million. If we just add another 4 million to it, you're going to be pulling back with 14 million. And it's an inside bar as we speak. That means so long as Biogen does not get below 414.22, inside bars basically mean the trend will continue. Well, how do I know that? It's pretty simple. All you do is you just take a look at just master probability. Take a look at inside bar right here. Let's just, this is a weekly chart, all right? So if we take a look at a weekly chart, take a look at December 15th, 2014. Up with 10 million, back with 6.9. What kind of bar was that? Well, let me just do this. Let me just erase that. You'll see it. You'll see it a lot easier. Inside bar. What happens? Trend continues. Where's the next inside bar that we have? Well, takes us to February 2nd, 2015, the beginning of the week when I'm using this service here. And then what happens? You got an inside bar February 9th. What happens? Trend continues. Do we have an inside bar even here? Let me see. The low on March 2nd, 406.10, 406.02. No inside bar there. So do you think that inside bars mean anything? And if they do mean something, what does it mean? Yeah, it pretty much means that the original trend would still continue out there. So that's what's going on inside of Biogen. Now back to the daily chart here. Yeah, volume yesterday, 3.7 million shares. I take it back. All it did was to close the gap out there. But, it made a high with 10.6 million shares. The daily chart says Biogen, BIIB, wants to go back up to the highs out there. And I don't know what the weighting structure inside the IBB is for Biogen, but at least that is what its message is. So now we got the Dow off 42. That's after, of course, futures being down 150 points out here. And if we go back and we take a look at that ES mini chart out here, so always keeping things in perspective out here. We take a look at that 30-minute chart. We can now clearly see we've got another 11 minutes here before we get into the close of this candle, but you're now seeing that change in trend. So it looks like that 7th wave candle session to the downside, doing its magical work again out there. This is Steve Rhodes. This is TFNN. Be right back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Welcome back, folks. Dow's off 51 points. S&P's down 4. Composites off 14 as we speak right now. So as we just kind of wrap up what we discussed here so far this morning, again, if we go back and we take a look at the S&P 500, just simply from the long-term basis, we saw price, move lower at the open this morning. Key level of support for it, about the 2,043 level. So far, we've seen a low this morning, 2,049 to 16. It's a key level of support support. Until that gets broken, the market's just doing what it has done so many times in the past when it breaks through those levels of horizontal support and resistance. Again, those things going way back in time. That's why that was created when prices were between the 1110 and the 1265 area inside the S&P 500. Key levels of support have held. We took a look at that 30-minute chart here inside of the ES Mini, the S&P. We know that right now we've got another 4 minutes coming in. We don't know if we're going to get a close above. Remember, the wick of the candle is nothing more than just the extreme emotion. It's just a temper tantrum. It is nothing more than the body of the candle that we want to really focus on. And the body of the candle says we need to see a close above 2045.75 or 2046.25. So a little toss up here with 4 minutes to go. But if you do see a close above that, then the old area of resistance could become a new area of support. Until that time period, all we have is the information to know what it is that we need to watch. To draw a conclusion here, would be kind of silly. However, if we go take a look at the daily chart here for the ES Mini, it's trying to form a hammer candle. Hammer candles, they're very important reversal signals, especially when they come in right around levels of support. And in the case of the daily chart for the ES Mini, you've got a nice big bullish engulfing candle that occurred right here, and that was on March the 12th. Price coming back into that swing point. Price coming back looks like testing its market profile low. You get a close today, if we just simply close around 2047, 2048, you'd have a hammer candle. Now, I don't know if that's what's going to happen. I just know that from a daily basis, that's what you'd be looking for. So, folks, if you're off to start your Thursday, have a great day. Otherwise, stay tuned. Hour 2 of the Trader's Edge is up next. And, of course, we'll have Tom doing his market minute update in just a few minutes. Take care, folks.